So today we're joined by Jake Boyle, who's one of the directors at Caleb and Brown, a very famous cryptocurrency exchange firm. And we're going to talk today a little bit about crypto, particularly Bitcoin and some of the altcoins, the future of these investments, and ways that those in our audience may be able to capitalize on that. Jake, it's great to have you. Welcome to the program.
Thanks for having me. It's a pleasure to be here.
Great. Jake, so first off, I just want to talk a little bit about your background. You have a lot of experience, obviously, with Caleb and Brown. You have a lot of experience in the cryptocurrency space. What inspired you to get involved with this? And what is it that Caleb and Brown focuses on today?
So I first got involved in the space personally in 2013. Caleb and Brown has existed since 2016. So this isn't too much of a time horizon in terms of traditional worlds and traditional industry, but for the crypto landscape, it's quite a long journey. It's several bull markets, bear markets, and everything in between. I first got invested in the space because a lot of my studies at the time were surrounding these ideas of fiscal liberty and owning your own assets, the future of technology, internet money. All this whole cyberpunk movement was some of the stuff that I was studying at the time. And because I'm researching it for the purpose of that, I also kind of convinced myself through that research that, maybe I should actually start taking this more seriously and not just seeing it as a pure academic pursuit. So I had a lot of friends in the space at the time. So naturally was able to fortunately invest in Bitcoin, a very complex process back then, quite literally meeting someone at a Starbucks and physically over the counter purchase of Bitcoin, literally. But obviously since then, things have evolved a lot. And Caleb and Brown kind of embodies that same spirit, whereby we want to help people with early innovation in the space. What we want to achieve, though, is a way where people can get a premium service. They can get the accountability of real human beings in a regulated organization. And through that, they can be empowered to invest in things like Bitcoin or altcoins or meme coins or whatever it is you really are interested in the crypto space. You can do that with the guidance of a team of professionals who work with you 24/7. So that way, if people are purchasing Bitcoin or anything for the first time, they don't have to go through the hoops that I had to go through back in the day of setting up my paper wallet and everything in between. They can just call someone and get a professional service. And that's kind of how we've found ourselves here today.
That's great. Thanks for that background. One of the things I think is very, very valuable to our viewers is a overall view of the investment landscape right now. So taking a couple of steps back, the Federal Reserve has just recently cut interest rates. There seems to be a little bit of a upswing in the market. But surprisingly, long-term interest rates have gone up a little bit. And there's a little bit of uncertainty as far as the direction the market's going to go right now. What is your view on where the general investing landscape is going to go in the next, say, 2 to 3 years? And obviously, we can tie cryptocurrencies into that. But I'd like to hear, your view on that.
So as far as a general investing landscape is concerned, at a macro level, I'd say the biggest concerns right now is the landing that we have with respect to the high interest rates and high inflation that we've had since this COVID era of the 21st century. Now, talks of recession, talks of economic bust are certainly hitting headlines. I think the reality is that it really does come down to the US election. We do see historically that elections are often periods that bring about a lot of rally in the market, because irrespective of which candidate ends up proceeding into power, change is often welcomed by the stock market. That's as far as history is concerned. So if history does repeat itself, irrespective of which outcome we have, it's likely that investors will flock to it one way or another because it's completely different from the Biden administration, which has obviously been quite criticized for good reason. Now, beyond that, if we are to see a Trump administration, then what's likely to be the case? What's likely to be the case in a Trump administration is it'll be much more pro-economic policy. It's likely to kind of bring a major sugar rush to the industry, which could ensure that high-risk assets such as cryptocurrency perform quite well. Now, on the flip side, if we have a Harris administration, we might not get that immediate hysteria, but we might get a bit more structure and potential growth over the coming years if they are able to enact policies which address these concerns. Now, as a humble, fairly apolitical Australian who can't vote in any of these elections, I try and look at these things objectively. So with that in mind, I think that globally, we are likely to do better in the next few years with a change in administration and with decreasing interest rates. However, I would be kidding myself to think that that's going to be a linear line of great performance. It's likely going to be quite choppy. And through that choppiness, we can expect assets like Bitcoin and cryptocurrency as a whole to get hit particularly hard because they're 24/7. They're often quite liquid. They're easy to transact in. And they're the things that people sell off first. If the market's in decline and there are recession fears, we find that investors are going to sell their cryptocurrency before they sell their gold or their index fund holdings.
So you would agree then that crypto, particularly maybe more the altcoins, less Bitcoin, but crypto in general is more of a risk asset and less of a safe haven?
As it currently stands and historically speaking, we'd have to say that cryptocurrency is certainly a risk asset. It's more tied to the S&P 500 than it's really ever been. In saying that, though, we kind of have to separate Bitcoin from the altcoin landscape. If Bitcoin is a north of $1 trillion market cap with billions and billions of dollars of trade volume day after day. Some of these altcoins have got a $25 million market cap, 8 people working for the project. Of course, they're going to be in a different basket of risk, much like penny stocks versus established companies like Microsoft. But in saying that, we have seen times in the past, the Ukraine war as an example, the fall of Silvergate Bank as an example, where Bitcoin has actually performed quite well and it has shown signs of being treated similar to gold, whereby investors flock to it with some degree of understanding that it could be a safe haven asset. Now, we have to remember Bitcoin's barely over a decade old at this point in time. So things will change in the future. As it currently stands, we can't say for certainty that it is going to be seen as a safe haven asset, nor can we say for certainty that it's going to be grouped up with altcoins and risk on stocks and just put in that basket forever.
Oh, I know that there's been a lot of talk about Bitcoin, especially amongst the hodlers and the bulls, that the $100,000 price for Bitcoin is within reach. And I've heard that. I've discussed that with some of them for quite some time. Do you see that as being realistic within the next year or two, or is that again? Okay, so and do you see that as being again more likely tied to political outcomes, or not? Do you see that as something that's more fundamental in the market?
I think that Bitcoin's performance and its rise to $100,000 is fundamental in the market. I don't think that either administration or the political framework will change the long-term horizon of that. However, it'll certainly impact the time that it takes to get there. And I say that because if you think about it, Bitcoin is something that exists with no marketing campaign, no CEO, no board of directors, no corporate governance. The governance of Bitcoin is in the mathematics, which underpins how it works. Bitcoin is contingent on technology, and technology, per Moore's law, technology increases at it disproportionately increases in its advancement relative to its cost over time. There was once a period where having any form of computation in your house, you have to be extremely affluent to have that. Now I can go to a local post office and get a computer chip in a birthday card that sings a song to someone based on a little battery, and it's going to cost me $2.50. So we know that technology increases at staggering degrees of advancement over time. So having a money system and an asset class such as Bitcoin, which is contingent on being validated and protected by technology instead of a legacy system like we have with other assets, that really is the long-term play. And the long-term fundamentals of that really do make a lot of sense. And Bitcoin has gone from $1 to a $60,000 per unit asset over $1 trillion market cap in a decade without any marketing campaign, no C-suite, no corporate bureaucracy, nothing. So I think that Bitcoin has already chosen a direction, and that's based on validation from millions and millions of people all around the world, regardless of what language they speak or regardless of who their political leader is. So I think to think that Harris or Trump or any other politician for that matter can derail the Bitcoin train, I think would be a defeated or narrow-minded approach to looking at it. Rather, I would say that the political outcomes will change short-term volatility, and for short-term investors, that could be great news or terrible news. But I think that Bitcoin is here to stay, and the politics won't shift that.
In your view, Jake, where do you see the demand primarily coming from? Like when you have even retail or institutional investors moving into the Bitcoin space, do most of the buyers, do they see it as a future currency, like where you're actually using it to buy directly buy retail goods, or do they see it more as a store of value or something else?
The vast majority of clients that we work with, so we work with over 30,000 clients around the world, a lot of which are entities such as a family office. There could be a self-directed IRA. There could be a company wanting some of their treasury exposed to Bitcoin, or they could be businesses that actually operate and receive Bitcoin and need to sell some of it into euro, US dollars from time to time, and so on. The general attitude we find, and the overwhelming attitude we find with people we work with as customers or as businesses we liaise with, is that Bitcoin is seen as a store of value. The original white paper of Bitcoin suggested that it would be a money system and it would be used for transactions. The reality is that the market has just absorbed it and valued it differently. Bitcoin has performed exceptionally well on the basis of ETFs and large companies such as MicroStrategy seeing Bitcoin as a treasury asset that they have on their balance sheet. They're not doing that so they can pay wages or pay software expenses in Bitcoin. They're certainly using US dollars for that, but they're doing it because they like the principal rationality of Bitcoin, and they believe they can get a better yield on that over time via capital growth than they can on US Treasury bonds or simply leaving cash in the bank. So the majority of people see it as a store of value, which isn't bad. Bitcoin not being money in the way that we use US dollars on a day-to-day basis is not inherently bad. Much like gold is no longer used as a means of transactions as it was hundreds and hundreds of years ago. We developed beyond that, but gold's market cap is at all-time high now, not hundreds of years ago. So whilst it's changed, people have changed their investor attitude towards gold since, let's say, the Roman era, the asset has increased dramatically in value despite that change and shift in how people view it. And I think Bitcoin is mirroring that just on a much quicker timeline.
Okay, that's a very interesting perspective. Since in your view, or at least the buyers of it that come in to Caleb and Brown or that you've spoken to, view it more as a store of value. How do you respond to naysayers about Bitcoin who say, it isn't a store of value, or, it's some sort of a Ponzi scheme? What is your response to that when you hear that, in order to kind of, prop it up as a legitimate investment asset class?
So Bitcoin, I haven't actually heard anyone suggest that Bitcoin's a Ponzi scheme in quite a while, but certainly in 2016 to 2019 period, when Bitcoin was maybe $2,000 to $5,000 kind of range for a lot of that period, we definitely were getting that from a lot of people. Now, I'm not suggesting that the price of Bitcoin should be an argument against it being a scam or a Ponzi scheme or anything, because as we know, there's been plenty of examples which are billion and $1 million assets have in fact been a scam, and you can't say, oh, but this is worth so much money, therefore it's not a scam. No, that's a silly way of looking at it, of course. Look, the great thing with Bitcoin is the more you understand it, the more you can have your ideas validated by objective data. So if I send someone Bitcoin and they say they didn't receive the Bitcoin, I can go on a Bitcoin block explorer and I can see all the confirmations of all the miners around the world who have absolutely categorically ensured that my Bitcoin has been sent to that individual and that wallet now has that Bitcoin. Now, that doesn't exist with fiat currencies whatsoever. We don't have that degree of oversight. So with fiat currencies, we trust in a system and we just blindly trust that these government bodies that dictate how banks should operate, and the banks themselves, which are often private or publicly listed companies, we just assume that everything will be honored, everything will be protected. Now, Bitcoin does not have that degree of governance, which is very daunting, and it's something new, which means thinking of it as a scam is probably a smart way of going about it, because it's good to be wary in this space. However, once you understand how to read a block explorer, and once you understand how to read a white paper, you can actually say, well, hang on, the supply of Bitcoin is capped. The means to which supply enters the market is built on foundational logic and mathematics, unlike the way that US dollars enter the market, for example. And the means of which I can see how I'm transacting in Bitcoin and where I'm sending it and where I'm receiving it and where it came from, the origin of these coins, all of that is public information. So you could be someone who's been in the Bitcoin space since the dawn of time in the original cyberpunk movement, or you could be an everyday person who's got access to the internet and is able to do a bit of research, and you can both actually understand and have the same access to information on Bitcoin. No one has a competitive advantage there. So I think that's what a lot of people really find makes Bitcoin something that can be viewed objectively. So therefore, as a result of that, any concerns about it being a scam or a Ponzi can just be combated with understanding the mathematical frameworks which dictate how it operates. There's a rule book for Bitcoin, and that rule book cannot be changed.
It's an interesting perspective. It's kind of more education, in your view, the more one is educated on the topic and better understands it, the more likely it is that they're able to see the value in it.
I think that people often conflate scams and Ponzi's that exist using Bitcoin with Bitcoin itself. Now, if someone says to you, send me $10 of Bitcoin, I'll send you $20 of Bitcoin back. You send them $10 of Bitcoin, they block your phone number and you never hear from them again. You're being scammed. Now, that is not an inherent flaw with Bitcoin. You could argue that one of the flaws with Bitcoin is because it gives so much power to the user needs to be educated to make sure that they're responsible with how they use it. That I definitely agree with. But that example I gave then, Bitcoin has not scammed you. A human being has scammed you. So I really do think the centerpiece behind this is just critical education, which is half the reason we started Caleb and Brown, on the basis that we can provide that to customers, because we can have objective conversations with no sales pitch to walk through the pros and cons of Bitcoin and Ethereum and other cryptocurrencies out there, and then let people make more informed, empowered decisions with that information.
Speaking of investing, a lot of our viewers are either active military or veterans. I myself am a veteran, and we have conversations kind of about where military invest. And one of the things that they don't necessarily have access to, or at least isn't encouraged institutionally, is investing in crypto, particularly Bitcoin. Again, not giving financial advice, right? I'm not saying, hey, we're going to promote a particular, ETF or a Bitcoin exchange. What is a good way or an easy way method for someone who really isn't well educated in this, but wants to own a little bit of Bitcoin, maybe to diversify some, particularly for like military? If they wanted to own some, what's one of the easiest ways to do that?
So I think that whether you're actively in the military or whether you're no longer active in the military, or irrespective of what your career is for that matter, I think that dollar cost averaging into Bitcoin, if you want to have a conservative, less risky, less stressful investor experience, is probably the best move forward. I say that because if you look at Bitcoin over time, when it has these down periods where it's not performing so well, it stays there for a significant amount of time. Then when it has these periods of euphoria where it reaches all-time highs and it's performing exceptionally well and it's the front page of the newspaper, it is not in those time periods for anywhere near as long. So as a result of that, if you gradually purchase a small sum of Bitcoin, it can be a few $100s every month or whatever the case may be. If you do that over time, historically, you will end up performing quite well. So if you just look at Bitcoin's performance over time, well, if I bought $100 every month for the last 3 years, you'd be up significantly now, but you would have never had to stress over it dramatically by any means. So I think that for those who want to have more of a hands-off approach, the two things I would suggest is, one, find someone or a company or a YouTube channel or a platform or a Patreon group or whatever the case may be, some form of community where you can get some objective perspective on the market. So you're not getting hit with a big sales pitch. You're not getting told to buy the next meme coin that's going to 1,000x. But you're just getting facts. So that way you've got some community you can lean on, so you don't have to spend hours and hours researching it. You can just get short, sharp summaries, and you have enough information to make decisions. And then second to that, if you're wanting to be as risk averse as possible and you're extremely busy, or if you're out of the country in active service for that matter, whatever the case may be, dollar cost averaging just Bitcoin tends to be a fairly good strategy over time. Of course, history may not repeat itself, but for what it's worth, if anyone did that over the last few years, they would have done very well. But if you're going to start touching altcoins and things like that and wanting to look at the market 24/7, you got to think, well, is that going to make my life easier, or is that just going to stress me out?
Jake, speaking of investing like into Bitcoin, I know, what you're recommending is kind of dollar cost averaging, doing something essentially on an inexpensive side. What is it that Caleb and Brown does particularly that's different that would be able to help someone in investing in Bitcoin?
Yeah, so there's a lot of things we do different at Caleb and Brown as a brokerage model instead of an exchange model. The biggest point of uniqueness in our service is the fact that it all revolves around human communication. So if you've got an account with us, we have the support team, you've got 24/7 brokerage. So you'll have a broker whose whole career is to take care of your account, make sure you're happy, make sure you're getting what you want. And they've got a team surrounding them. So that way, if they're asleep, you've always got people who you can contact. They have full context over what you need. You don't have to repeat yourself. You're not waiting on, in a queue speaking to a teleprompter or anything like that. You're not waiting for a support ticket for 30 days. So we're really investing in that human experience and that more premium white glove service. That's our unique selling point. That's the approach that we take. We don't want millions of customers and an automated system where if they screw something up, well, that's your fault. We're not going to even know who you are, so we couldn't care less, which, for some exchanges could very well be the case internally, how they kind of operate. For us, we know every single client. We often catch up with clients for lunch and dinner if we're in the same town, and we just really invest in that long-term personal relationship. And that way, if the client does want a dollar cost average, we have products that we can ensure they can do that for Bitcoin or anything else. If the client wants access to unique tailored research, we provide that free of charge. We don't have any extra costs like that. If the client needs help with custody and they need more of an institutional solution, we provide that. And if the client's looking to set up their own ledger or Trezor or hardware wallet, their broker will help them get it tested, walk them through the process, help them optimize security on their account. So we just try and make it as premium and human at every corner to kind of make it a less stressful experience for you and make sure you're not falling victim to some of the problems that the space has.
Jake, if there are viewers who want to follow you, read some of your research or commentary on this space, what would be the best way for them to reach you?
So if they have an account with us, you'll just instantly get access to everything. You'll have an online portal that regularly puts research through there, and you'll join our newsletter, so we'll be able to reach out to you with anything that we find. If anyone wants to reach out directly, my email is just jake@calebandbrown.com, JAKE. So fairly easy email there, or you can just reach out via our website. And we have the internal approach where we actually really take a lot of pride in helping people. Everyone in our company is invested in cryptocurrency, and many people in the business have been invested for over a decade now. So as a result of that, we're really excited about helping the industry grow. We have a vested interest in the success of cryptocurrency investors because we are them ourselves. So as a result of that, if people have questions, even if they want to trade with us, if they don't want to trade with us, if they just want a trusted ally in their corner who can help them out, we actually welcome those conversations. You're not getting charged to speak to us, so you've really got nothing to lose.
Well, thank you for explaining that, and also for your time. I know our audience appreciates your expertise on this, your guidance. I'll be sure to post that email and information below. So if anyone wants to reach out to you directly, potentially even do business with Caleb and Brown, that they'll know where to go.
That'd be
Jake,
great.
thanks again for being here with us. We'd love to have you back at some point in the future, and we really appreciate your time.
Oh, it's my pleasure. Thank you so much, and thank you for everyone who's
Yeah,
listening.
and
And
to the yeah, thanks, Jake, and to the audience, thank you for watching. Remember to like and subscribe.
thank you.